All right. Woo, woo, woo. Okay. Today, what we're going to jump into is investing in stocks for beginners. So I know you want to get into the stock market. And you want to figure out how to start growing your net worth, start growing your portfolio. And the people that get successful and get wealthy in this world are the ones that own assets. They own things that they can take, that'll take and grow up in value. One of the easiest ways to get into stocks, I'll break down 3 secrets, what makes this stuff work so well, and what it'll cause you to be interested in stocks. Okay. Like one of the challenges that we have is sometimes we don't like a person's got to be very well balanced, be able to run and operate a business successfully. And a lot of times, like you've got a technician, the guy that actually turns the screws and makes stuff happen. There's another person in this portfolio where he's the guy that can run operations, he can execute, and he can make sure that things are working systematically so that it successfully creates profit. And then you got to have like these visionary people who can anticipate and create ideas and stuff that people can execute on so that you're moving in the right direction where the opportunities lie. Problem is like us as individuals, we typically seem to be polarized towards one or the other, but we don't seem to have a strong strength in each one of them individually. And so when you get into that dynamic like that, you'll see guys that are like technicians that try to create their own businesses, then they take and they fail. And the big reason that they take and they fail is they're not well balanced. They actually are, it's almost as though they're polarized towards another. And one of the cool thing is when you get involved investing in stocks and stuff, you can start identifying companies that not only do they have technical expertise and talents to be able to operate it, but they also have managers who know how to take and to execute to crank out the cash. And then they got visionaries that help steer the ship into the right types of opportunities so that they can be successful. And that's like one of the big secrets behind getting into stocks. So you're like, hey, I'm interested. I want to jump into the game, but how do I jump into the game, or how do I start creating revenue or creating an opportunity for me to start growing wealth? And the challenge is you're not going to have a lot of these different assets or these talents or skills individually, what you need from a collective team to do it. But you don't have to possess all those, because the cool thing is when you start investing in stocks, you can buy into companies that have already put the machine into place that allows you then to take and to move forward and execute. Like you look at the beginning days of like, not Walmart, but you take and you look at McDonald's. One of the cool things, like I read the book, Ray Kroc, Grinding It Out. And he talks about like how he took and they made like perfect hamburger patties. Like they had systematic ways to create the patties, to create the perfect size, to have the right fat ratio into the right types of meat, to make sure that the meat wasn't diluted with different products or like hearts and livers and all kinds of weird stuff. So they had quality controls on that. Then they had quality controls on how they made the French fries. And as I read that book, I'm like, wow, like McDonald's literally created a machine that was so cool that at first blush, you don't even notice the details of it. In fact, until you read the book, it's hard to appreciate what he went through to take and to create that. Okay. And as long as he went along that way, he actually had to put people and experts in place to allow that business to grow. And so when you start investing in stocks, the first thing to kind of recognize is like it helps to be able to buy into a slice of a business. Owning stocks is actually owning a slice of that business that then allows you to benefit from all the different talents of folks that can take and make a business successful. And so what I'll do is I'll break down 3 things that'll help you get into the game. That 3 things that you need to understand is, so like number 1 is when you buy into a stock, you're literally buying in or hiring out. By putting your money into it, you're literally hiring out somebody to run and operate your business. Now, you might not be a huge business owner, maybe in the beginning because you don't have tons of capital, but what it is you're hiring these guys to take and to manage your capital and to be able to grow it, and it allows you to buy their expertise. Okay, so that's number 1. Okay, number 2, one of the cool things about investing in stocks, okay, is when you're doing it, if you don't have a lot of money up front, like when I want to go buy real estate or something, I've got to put 20% down on a property. And so that'll cost me probably 25, 30, 40, $40,000 when I took him, when I acquired him in the past. And so it got very capital intense to be able to start acquiring those assets. And like, you can get into stocks and you can be, I mean, let's just say you only have $1,000 that you're able to take and invest. That's enough that allows you to get into the game and to start buying slices and slivers of these companies. Okay. Which is super cool. And so you can be an investor without having a massive amount of capital. So that's kind of number two. And then, like, I'd say secret number three is, one of the cool things that has recently happened, when every time you used to make trades and you would trade stocks in and out of stocks and stuff, they would charge you like $7 to $10 transaction fee for making those trades. And as you start making a lot of trades, you could quickly discover that all of your money could have gotten wiped out in the trading fees. And those trading fees have actually been removed. So you can now make your trades for free, which means that if you don't have a lot of capital, maybe you're rolling into this thing with $300 or $500 or something like that, that means that you no longer getting charged those fees. And so your actual capital is not getting wiped out by that. Now, when a couple of things to look at, like, what, the way I like to, I set mine up, I went to TD Ameritrade. I like their platform. I haven't tried a lot of them. I tried, was that IB, Integrated Brokers. I can't remember what it was called. I liked that one at the time because it was only $1 to be able to make a trade versus what I was paying on TD Ameritrade was around $7. But the fact that they took away all the trading fees, I like TD Ameritrade's platform better. And so you could literally just go to TD Ameritrade or pick one of your E-Trade or pick up, I can't remember. There's a few different platforms, but literally you can go in there, you can set up an account. You don't have to put a significant amount of money into it, okay? And this will allow you to get in to position yourself so that you have capital set there inside like one of these brokerage accounts that then allows you to be able to start making your transactions. And then what you're going to do is you're going to start looking for and identifying companies that actually have value. One of the ways you'll hear, like, Warren Buffett talked about, he kind of, in the beginning, what he described is he would look for, like, he'd call it cigar butts. Okay. What it is these companies where the stocks have been beaten down so much that the company itself still has value, but it's just trading as though it has no value. And he says the thing is it's like you're walking down the street and you see this soggy cigar butt and it's on the ground. And he says, then you can bend down, you can pick it up, and you can take one last good puff out of it. And he says it's kind of soggy, it's kind of gross, right? But you can pick the thing up and it still has life in it. And he was looking for companies in the beginning that took and it actually met that criteria where it was just kind of nasty, right? But it still had value. And then he would find a way to take and to unlock that value. And sometimes it's just passage of time. Sometimes, it liquidate, or somebody'd come in and buy the assets, buy up the whole company. But they would end up paying a premium to take and to buy the current shareholders out. And so he would find companies like that. If you want to dig into that and understand better how Warren Buffett did it in the beginning, he followed a guy by the name of Benjamin Graham. And so here's you a mammoth book. It's called Security Analysis. The one I've got is the 6th edition by McGraw-Hill. So it's called Graham and Dodd, Benjamin Graham, and then his partner, I can't remember his first name, his last name was Dodd, but Security Analysis. This guy, he was the mentor for Warren Buffett. And then later he compacted it, he made it simple, and he wrote this book called The Intelligent Investor. Like, one of the things couple things that you can look for if you're not sure exactly what to look for, being able to start pick out stocks, I would start looking for stocks that if you look at it, they've been in business for more than 10 years. In fact, it'd be better if they've been in business for more than 20 years, meaning that the company's been around. I would look for a company that's been able to have a dividend for the last 20 years. And then look for one that is trading for less than 15 times earnings. And if you find those three things, that typically can create a margin of safety. And what I mean is the margin of safety. One of the big things that you're trying to do is you're trying to protect your money, meaning you don't want to lose it. And one of the ways you can take and protect yourself is identifying companies that have been around for a long time, has a history of paying dividends, and it's trading for less than 15 times earnings. Now, if you're not sure what 15 times earnings means, it's like it based on its revenue, how many years would it, if you put your money into it, how many years would it take to be able to get your money out? And you'll see a lot of stocks seem to trade about 15 times earnings. And so that's a good guiding post. Another good guiding post is, for give you a fourth one, is take and identify companies with a market capitalization of over $1 billion, which means they've been around, they're well capitalized, there's enough talent inside the company that allows it to operate. And like if you find those four little elements, like that's the basics to be able to start getting into the game of investing. So anyway, one thing I'd highly recommend is get this book, The Intelligent Investor. Jump into it, just read it. Particularly pay attention to chapters 8 and chapter 20. Those two will help you take and get your head wrapped around the way to invest in stocks. Anyway, okay, hope you found that useful. We will talk later. So this is a Rags for Riches transformation. That's what I'm looking to do. That's what I'm looking to show you how to do. You can go to asksolarmike.org, find me, and I can see what I can do to help you. So talk to you later. Bye.